Hi, so this is a bonus section of this course and it's to identify what you would look for in a stock in order to purchase it. And the best way of thinking about buying stock is that you're buying a piece of a business that you intend to hold for let's say long term, 10 years. And what you would imagine is how the cash flow of the company will look like in 10 years' time and discount that by the current interest rate along those 10 years. So what that means is that let's say I look at Mondelez and let's say that I look at, for instance, the trailing P. So that means price per earnings. Price per earnings is calculated by the price of each share divided by the earnings that each share in the company produces. So by having a look here, the trailing is 23.6. So the stock is currently selling 23 times the earnings per share. So that basically means that in 10 years, let's say I'm expecting that stock produces let's say 2.3% of average returnings, and that the interest rate stays 0% in the US, for instance. So that's something that you can look for. Um, but I think that's usually will always be a ballpark of things. So you never get an accurate, precise answer. So whenever actually evaluating stock, the best thing to do is obviously to diversify as much as possible with uncorrelated bets, aim to have 15 to 20 uncorrelated bets, and then compare stocks across the same sector. So for instance, if you don't have a stock in the food and drink industry or the FMCG, maybe you should. And then today, I'm just going to compare Mondelez versus Kraft Heinz, just to understand the main things that I would personally look for in a stock comparison. But that doesn't mean that you need to look for the same variables, but those are widely recognized by Benjamin Graham and Philip Fisher, which are the grandfathers of value investing. When looking for stocks from a growth perspective or tech perspective, usually those things get a bit blurred, but it's still is the best thing that we have in the fundamental analysis. So let's see. So let's say 23.6 for Mondelez. For Kraft Heinz would be 22.2. In PE, the lower the better, so that means that Kraft Heinz right now is cheaper. And the second thing that I look for is the price per book value. That basically means that should the company go bankrupt, if they sold all of their assets, and the price per book value was so low, that the company selling all of their assets would pay for the price themselves. So it's 0.89 for Kraft Heinz and 3.03 for Mondelez. That basically means that Kraft Heinz has very, very strong assets, and even though the comparison of their PEs is not that different, it's only only 1 percentage point. The price per book value is actually drastically different because that means that Kraft Heinz assets are quite valuable for the price that it currently sells for. The next thing that I will look for is return on assets. So basically, that means is based on the assets that the company has, how efficient that company actually is, how much return on the assets it can produce. So Kraft Heinz is 3.38%, whereas Mondelez would be 3.86%. So quite similar. Mondelez is a little bit more effective than Kraft Heinz in terms of producing results based on the assets. It could be the fact that Kraft Heinz is just overvaluing their assets in the books because the price per book is quite low. So you can see that this stock analysis is more of an art than a science, but those are the things that you would look for, you know. So in terms of how the companies actually are, in terms of Kraft Heinz produced $25 billion in revenue, which Mondelez is pretty much the same. So it's something interesting to see, but you know, it's just to give you an idea of the company. Then you want to see as well the dividends, how the company has been with dividends, and also whether the company has been increasing the dividends rate or not. So the average 5-year of dividends with Mondelez is 1.84%, whilst basically the trailing annual dividend rate is actually lower than that. But the company does have a forecast of increasing that dividend. So that basically means that it will really depend on whether the company will fulfill its aspirations and promises, the future of this stock. At the moment, Mondelez as a stock is not the best that I've ever seen. But I think that the company is priced at the price it is right now because of coronavirus and the fact that food and FMCG industries do really well in the event of a recession. And whilst let's look at Kraft Heinz. So the 5-year is 2.98. They're currently giving 4.5%, and they have the aspiration, the forecast of 4.43. So basically, you can see that there is a trend of increasing the dividend rate with the stock, and that is usually a positive sign. The next thing I will look at is the compensation of the management team. So, for instance, here is Mondelez International compensation for the management team. So the main guy, chairman and CEO, he receives $18 million. The second main person is the chief of CFO, $5 million. So let's look at how much the Kraft Heinz. So the main guy, Bernardo, he's 27.7. Actually, Bernardo's just being replaced, but let's use $1 million. And so it actually a lot more than Mondelez CEO. But another important thing you should look at is the base pay. What is in cash compensation and what is in stock compensation? Because whenever it's stock, they have skin in the game. That means that they really need to make the company succeed, you know? So 2 million of cash compensation was 25 million of total equity. So mostly all his compensation is on equity. So therefore that is a very positive sign, even though the salary is a bit too big in comparison to Mondelez. The second main guy in Kraft Heinz is 10 million, whereas the second main guy in Mondelez is 5 million. So it's about half. So the second main guy, he gets 1.2 million in total cash compensation, whereas 9 million in equity. So again, most of the compensation is in equity. Let's look at the Mondelez chairman and CEO. How much is cash? How much is base pay? So actually, cash is quite big for him. 6 million cash and only 11 in total equity. So not much skin in the game. Half of his compensation, not half, but 1/3 of his compensation is on cash. So those are just a few of the things that we will look for. Not all, again, but it should give you a nutshell of a few things to look for. I hope this was helpful, and thanks very much.